This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Professionals.
Hey, good morning. I'm Jeff Farnham. You've probably heard that owning a home is a smart investment, and you don't always have to wait to sell your home to see the returns on your investment. You may be able to use the equity in your home to borrow money for home improvements, college tuition, or even debt consolidation at a lower interest rate, potentially. As a homeowner, you have two main borrowing options: a home equity line of credit, also known as a HELOC, or a cash-out refinance loan. A HELOC is an adjustable rate home loan that you can access like a credit card. It has a credit limit that you can draw from and pay down over a set draw period, typically 10 to 20 years. Your payment is based on your balances each month. Some HELOCs require you to pay only the interest due and the outstanding balance, which means you're not paying the balance down. Some require a principal and interest payment. Most HELOCs qualify you by using a payment that's significantly higher than you'd actually be required to make. They do this because most HELOC rates are adjustable. HELOC rates are determined by adding the prime rate to a base rate called a margin. The prime rate moves as the Fed adjusts rates, which is possible when the Fed meets 8 times per year. When you have a fully amortized HELOC schedule, it can be amortized over 20 years, so your payment can be much higher by the end of the loan term than when you originally received the loan. A cash-out refinance is a first mortgage that allows you to take extra cash out of your home. If you own your home outright, the entire balance of cash-out refinance, minus the closing costs, would be net proceeds to you. You can use the money for anything from home improvements to debt consolidation. In the end, you'll have one new mortgage that covers both your primary home loan and the loan for the additional money. You may find this option appealing if you're looking for a considerably large sum of money and a lower mortgage interest rate. Refinancing may also make sense if you want to repay your mortgage over a shorter period of time, or if you currently have an adjustable rate mortgage. Switching to a fixed rate mortgage may give you more stability at a lower rate. The difference between a fixed rate and an adjustable rate mortgage is with a fixed rate, the interest rate is set when you take out the loan and will not change. With an adjustable rate mortgage, the interest rate may go up or down. Many adjustable rate mortgages will start at a lower interest rate than a fixed mortgage rate. This initial rate may stay the same for a few months or even a year. These are known as teaser rates. And after the introductory period with the teaser rates is over, your interest rate will change and the amount of your payment is likely to go up. If the adjustable rate mortgage is held long enough, the interest rate could surpass the going rate for fixed rate loans, thus costing the homeowner more money in the long run. A fixed rate mortgage charges a set rate of interest that does not change throughout the life of the loan. That means your principal and interest payments remain the same from one month to the next, which makes budgeting easier for homeowners. The main advantage of a fixed rate loan is that the borrower is protected from sudden and potentially significant increases in monthly mortgage payments if interest rates rise. If you've had a HELOC or a home equity loan as a second mortgage in the past, you can combine that second mortgage with a new cash-out refinance loan to consolidate all your debt into one single monthly payment. With interest rates rising now, may be the time to get this taken care of. If you have a home equity line of credit, give us a call for a free evaluation. And let's see if refinancing makes sense for you. Whether you want to purchase or refinance your home, give JTS a call. Don't put your trust in someone you can't sit down face to face with. We are local, trusted, experienced, and we'll present you with options depending on your specific situation. Thank you for joining me today, and be sure to tune in next week.
This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Professionals.